Okay, good afternoon, everyone. How are you? I hope everything is well with you. Just before we get started, because of all the nice moves that happened in the market this week, does anybody of you have something in specific you would like to look at? The cable, okay. Before we get, I want to show you, I'll get to the cable, but before we get to the cable and the silver, I'll start with FX, guys. All right. First of all, I want you to look at what happened last week and trying to identify for ourselves a winning pair or choosing a pair. So one of the things that happened, as you well know, all the situation that was taking place with and if you look at the euro dollar, and that you have to keep the euro dollar in your mind, because again with the event that's happening, it is the currency du jour, as they say, and it is something that you need to keep an eye on. Now, this here, the 138.36, as you have maybe I have mentioned to you last week, this is what we call our structural point, and that structural point is a decision-making point that below it we're going to be on the selling side, we're going to be short, and above it we want to be a buyer. And that is the move from 138.36, and even though you had a slight pullback over here, you need to stay with it until now the next structural point, which is the 134.77. Now, having said that, I'm going to the reason I'm doing this is because coming Monday, that is another situation that we need to address or to keep the euro in our minds whilst we are preparing for our work. So come Monday, the structural point that I have right here, which is this one exactly, to be precise, that would be right there. This is our right there, that which is the low of September the 12th, which is 135. Any trade below that on Sunday night or Monday or any time next week, that would be the indication that the euro is going to continue to the downside, and you want to be taking that as a short. The other pair that you want to discuss, which is the British pound, all what we're having today, the British pound, we have a structural point which is the 159.80. The 159.80, this is the major structural point. I'm going to put it here for you, and you'll see what the 159.80 is one of the very strong structural points in the cable. That is your 159.80, and we have, as I said, as you can see, we broke through here on the last week and we traded down. And today what we're having is a slight move back into out of the US dollar, and we're getting some maybe short covering in the pound and short covering in the euro, but it's not yet a trend change or a reason for us to go long or be heavy in the pound. The way I'm saying this, I'm not saying this because I am giving you a prediction or I'm giving you the way we trade, we don't do any predictions. We don't tell you that the euro is going to go to this point or that the price target is that. We simply know that we are human beings. We don't have the ability to predict the future. But as traders, our job is to make money, and we want to make money by looking at the path at which the instrument is moving, and we begin to choose. So for example, if we're looking at the cable, this here was short. We went short. The decision making point for us is the 159.80, and we said based upon the structure point, and you know, we do that every week on our trade planning session. We're going to be selling. If the price of the pound comes below 159.80, we should be short. If the price is above the 159.80, I should be long. And we use the 159.80 as our stop on either side of the trade. So I'm going to buy above 159.80 and I'm going to sell below 159.80. And the 59 is our stop. And therefore, right here, this is yesterday. And as you look here from yesterday, there is a very interesting setup. You see that the prices have broken below the lowest low of the momentum. This is the momentum that this market, the pound crashed for 3 consecutive days. And on day 4, the market sold off and it traded below the prior momentum low. It traded below the momentum low of the, was the around 157. And then it came back and closed the day at 157.50. Having seen that yesterday, now we have to decide what is our trade plan. Well, we do have here a structural point at 157.80. On some of your screens, guys, you will see 157.80. On another platform, it will be 157.82. But again, 1 or 2 ticks from one platform or one data feed to another doesn't make much difference. So this is your 159.80. And now we are going to do the opposite of what we did here. Here, let me show you in a second. Here, I said if like this below the 159.80, we're going to go short, and the next target is going to be that structural point, which is 157.80. So I have 200 pips on that trade. It goes the following day, and the close is normal. Then I'm staying with it. Then the third day, it comes in, and it gives me the third momentum low for the day, and it has penetrated and went through the 157.8. In this case, I still want to go short, and most probably on that day I would have gone short in the morning. And now once it came back and it closed right inside of the momentum low or above the momentum low, that would be our sign that the momentum has slowed down. Once the momentum slows down and I can identify on the chart there has been a change in momentum and that the market now is kind of pausing, then I will do the second job. So right here I would say to myself, what should we, let me ask you a question. So right there, and I see this, and now when I'm planning my trade plan for the next day, so my question for myself would be, where will I go short and where to go long? So right there, this is going to be one question: where will I go short, or where should I stay with my short position? And now I have to ask myself, where will I take profit? Okay, guys, where will we take profits here? Can anybody tell me? So far, up till this candle, we are short. Now, where will we take profit? $156.50, right? 153.46, 156, okay? Right? That is very good. But guys, the way we trade based upon the way of price behavior or the rule of price behavior, there are two primary rules. One, we cannot predict a target going forward. It is very hard or practically impossible to say that the market is going to go down. It may come down to 153. It may go down maybe to par. It can go as much as it wants to go, but it is very hard for a human being to actually predict the future. So in our way of trading, looking at this candle and after those 3 big days, I would say to myself, now I'm at 157.50. I ask myself, where is the nearest structural point that is above, but I'm sure, the current market price. So the market closed at 157.50. The next structural point is the 157.80. So we are going to place our stop right above the 157.80, and therefore we would have been guaranteed. Now, if any move up beyond that, I have guaranteed to have locked my profit from 159.80 to 157.80. I have locked that profit, and now I'm going to allow this to continue all the way until it goes. If it comes down below the 156.50, I will do the same thing. Let me finish the point. And where will I go short, or where will I add to my position? I will add to my position below the low of the day that the market lost its momentum. Today my trade now wouldn't be a loss, Jack, because if the prices comes above, like this, above the 157.80, you have captured this position, and now you can reverse. You see, Jack, and this is for all of you guys, you have to make your trading simple, and you have to keep it simple. Once you have things simple, then your decision is going to be gainful. It will allow you to make money. I will do the Euro, not to worry. What is the simplicity? I mean, I have explained that several times, but it is so important. I mean, this is the mark of a trade. What I'm going to tell you guys is the essence of becoming a successful trader. That if you accept those two statements that I'm going to tell you, and you think this way, and you learn to think this way, I guarantee you your trading is going to be much, much, much better, and you will be able to gainfully trade and make money. The first thing you have to say to yourself is, I don't know the future. That's the first one. We short and put the, let me finish, Jack, and I'll come back. I'll let you. 150, you short at 159.80, 159.80, and the 159.80, and then we took profit at 157.80. That's the first one. The second thing you have to ask yourself, if I don't know the future, how can I make money? The way to make money is you have to go with the path of least resistance. And the path of least resistance is what? Is only the direction of the momentum. When you have momentum in the market, that momentum will tell you the direction. It tells you need to be long or short. It tells you need to be a buyer or a seller. What you need to know is to identify the momentum. Where is the market condition? You want to be trading the market that's moving. And if you look at this chart, which direction is the price? Up from here. Which direction is the price from there? It's up. So anywhere you would have bought, even with these declines, anywhere you would have bought, you would have took money all the way up to there. So if you have identified that the momentum is to the upside, then all what you have to do is to be a buyer. Here, when the market is coming down and now you have a momentum to the downside, anywhere you would have shorted it, you would have made money. So if you understand, I will answer that question, Master. If you understand that, one, you don't know the future, so you don't know what target it is. I mean, it drives me nuts. I mean, that somebody can say that it is going, the euro is going to go to 136.76, whatever, and that will be my target, and I'm going to go and take my profits there. How can you do that? How can you predict that? If you don't know what you're going to have for dinner tonight, how can you predict where the euro is going to go, or where the pound is going to go? If it keeps on coming down, you're going to stay with that until, well, if you feel that you would have been wiped out, then you don't know how to trade it. So what you need to do is first identify the market condition, and based upon, Andy, I want you to listen to what I'm saying. I said you need to identify the market condition, and you want to be trading in the direction of the momentum. The third part is, if that momentum is coming to a structural point, this is where you want to sell it. So look here. Is this here a stage for momentum here? It is not. So that is the sideways. This is where you set up. But look, when the momentum is coming down, it crossed through the 159.80 and it sold off. You can expect that at this time you will have the, I have a solution, I'll tell you. As you see right here in this area, look at this. It's always giving you a congestion here at the 159.80. Look how many times it is giving you that congestion at the 159.80. Therefore, John T, or whoever is this, what you have to do is know what the market condition and trade it. If it's getting into a congestion, then you're waiting for that, for it to clear and decide which way to go. So once you know that, now this here today, that would have been the prices coming back above the 157.80, then that would be your buying point or your coverage. No, I don't use Henkin sheet chart, or I don't use that, Nibras. I'm a very simple guy. I don't use any indicators. I don't use, I use either this chart or I use this chart, which is the line chart. These are the two charts that I use. Either a line chart like this, or I use I need to see. No, I do two things. I always have two charts on my screen. For example, this is my crude oil workspace. I always have two charts like this. This chart is the daily chart that gives me the direction of the market. You see this? See how much the direction of this market, it is going up. Once I see this, I know the momentum is to the upside, therefore I have to be a buyer. If you would have bought, you would have had some volatility, but you would have never, you would have you've been making money practically every other day if you were on the buy. If you went short, you lost money. You went short, you lost money. You went short, you lost money. Every time you would have gone short in the opposite direction of the momentum, you would lose money. Every time you trade in the direction of the momentum, you make money. Therefore, I have this here that's giving me the direction. It keeps me honest, and then I begin to time myself on this chart. And we have the software that lines up for us the momentum lows, that lines up for us the ranges, that gives me where I'm going to buy and where I'm going to sell. And that is, so yesterday, for example, all what you're doing is selling yesterday, selling until the end of the day. Now today we are buying. So you need to have two charts, because if you're just using exactly, Mike, I'll answer that question for you. That's a very good question, guys, and I'm answering. Hold on a second. You always need two charts. One will give you, as I said, the direction. The other one will give you the entry. So I am now, look at this. Is the trend up? So I need to be a buyer. So I'm looking at this, trying to find a buying point. I can buy it here, I can buy it here. I'm trying to get into a buying point. So my focus, my mind is set to be a buyer. I'm not looking to go short. So anything that's coming down like this is a buying opportunity for me. Okay? The other question that Mike is saying that at some point the trend must reverse. We don't know when. No, I was going to give you a secret now, Mike. All of you listen to this. This is a secret. The idea that somebody tells you, Mike, that we don't know where the market is going to change or when the market is going to reverse, if he is a professional and knows the business, he wouldn't make that statement. I'm sure you heard it, that's why you're repeating it. But let me explain. We are technical traders. We are technical traders. What is the definition of a technical trader? A technical trader is a trader that applies the rules of the technical analysis theory and uses these rules to technically, based upon the rules of, he takes the rules of the technical analysis theory and he interprets them based upon the chart patterns, if the market is in a trend, if it's the market in a congestion, and he takes those rules and applies those rules so that he can technically execute his trade. Technically, I don't mean mechanically, I mean technically looking at the chart, the structure, the entry, the exit, and all. Okay? So, what does that mean if I don't know where the trend is going to reverse or not? So, before I answer this question, I want to ask you a question. And the question is, what is the definition of a trend? Can anybody of you guys tell me what's the definition of a trend? I'll give you one more. The definition. No, say it completed. No, wrong. What does no, you said half. You stated half the definition, guys. You stated half the definition, not yet. I will show you it. The definition of a trend is, this is the technical definition, is a series of higher highs and higher lows. A series. And the operative word here is series. Series. Series means more than one. Series means 2, 3, 4. Even 2 is not, doesn't really make it. A trend is a series of a higher highs and a higher lows. Okay? What's the other definition of a trend? How is a trend structured or composed? I'm looking, let's say we're looking at this. How does the trend look to me that I have a trend? Yes, I'm looking for a series of higher highs and higher lows. The next thing, I'm asking you because I want you to think. I'm going to give you the answer. That the wave structure, the move structure, in the direction in the trend, no, it's the structure, John. The polarization, no. I don't know what it's a big word for me. The moves into the direction of the trend, the move in the direction of the trend is going to be large, the distance is large, and explosive. Exactly. So the move in the direction of the trend, Marco, well done, is going to be an impulsive wave. I didn't want to use wave. It's impulsive and it's going to be massive, big. And the move in the opposite direction is going to be shallow and small. And you can see this is a big wave, a small wave, a big wave, a small wave, a big wave, and so far a small. The vertical it is, the better. Now, right here, I think it was, who's asking the reversal? Okay, whoever was asking about the reversal, right here, which way is the trend, up or down? Which way is the momentum, guys? Quickly, up or down? Up, exactly. So if it is up, you're looking, Mike, you're looking at this part. This part is, remember, it's a series of higher highs and higher lows. It has to come this to put the higher low. If it doesn't do this, it cannot put the higher low. You understand, Mike? If you're creating higher highs and higher lows, so every new high is going to be followed by a higher low. This is a normal reaction. This is what it happens. Okay, that's what it's like you and me breathing. We inhale and then we can't hold it forever. We have to exhale and relax and then take another breath. This is inhale, exhale, inhale, exhale, inhale, exhale. So now it is going to move up. So if the trend is up and now this is coming down, so should we be buyers or sellers? In this case, it's a series of higher highs. It is a trend. So this is the higher low, and I'm looking to time myself anywhere to buy it so this thing could go up. That is part, I mean, there are 21 rules that we do for trading and the setup, but that is what technical traders are. We don't read tarot cards. We don't, there is, exactly, Mike. So until the market proves to you that it is not going to go up anymore, then we begin to change our direction. But the market will tell you that, Mike, I have stopped going up and now I'm changing direction. The last part of the trend theory is that a trend takes a great deal of time before it changes. It takes a great deal of time and a great deal of effort. It has to work. People, remember, when people are buying, people are convinced that this is a positive move. So every is buying, they make money, and then they buy again, they make money. So they have tasted the gain, they have tasted the profit on the buy side. So automatically, when this comes down, they're only thinking of buying. And they will keep on doing so until these guys that are buying these lows are going to lose money. The only time the trend is going to change is when these guys, look at it, I mean, you can see it. You can see the buying coming in right now. Hold on. You can see here the buying coming in. There is the buying coming in. They will keep on buying. Yes, Austin, that's a very good question. What does it, the trend goes up and down in different time frames? This goes back to what they call the fractal theory. And I don't want you to get too much into this, but it's very easy. Think of having, remember when we were, have you ever went to a pond and you took, the pond was a lake, and you took a stone and you dropped it in the lake, in the middle of the lake? Okay. So if this is my center, the beginning point, okay? Now it's moving up a little bit, and now it pulls back and it goes up, and it pulls back and it goes up. So I can tell you it's moving up, but while it is going up, it moves in a zigzag. One comes down and comes up and comes down and comes up. So even though you might have, if you're focusing on a 1 minute chart, this might look like a downtrend. In reality, it's a pullback in the big move up. So a trend is made out of very small. So if you look here, guys, here, now you look at this, that is your, every pullback, it comes back at a bigger range, but I mean, you can say that this, for example, is, if somebody is trading on a 1 minute chart or a 15, very small time period, he would say that this is a massive downward trend. But that massive downward trend on a 5 minute chart is nothing more than a pullback on the daily chart. Because the price is made, it's the same, it's made out of the same thing. It's like the flakes of snow. Each flake is identical, and you put all, the more snow you put on it, no chart or, so the idea is it fragments, each fragment, the prices moves up like this in that zigzag kind of stepping, and that is the nature of it. So the trend, the big trend is made out a compilation of smaller and smaller trends. You can find a trend in a 1 minute chart. You can find a trend in the 15, a trend in the 60 minute, a trend in the hourly, a trend in the daily, and a trend in the weekly. And there are all trends inside the big major trend. Okay? The idea is you want to find the general direction of the big trend. You have big trend is going up. If I have a small trend that's coming down, this is the trend up. This small down trend that's coming down is not a trend that I will take as a short. I am looking now for one more push to the high, because if this is a trend, they have to make a higher high. These rules, that a trend is a series of a higher highs and a higher lows, since it is a rule, it remains intact and applicable until the market fails to follow this rule, which is not making a higher high. The chart that I look to determine the right side of the market is always the bigger time frame. And you don't want, because what Austin said, she or he, it's a very important question, because you might have an uptrend in the 5 minute and a downtrend in the hourly and then an uptrend. You need to focus yourself on 2 time frames and 2 time frames only, because you're going to confuse yourself. If you trade very small time frames, somebody was saying he trades 1 minute chart and somebody trades 5 minute chart. Anything that you want to trade, we as retail clients should not trade anything less than 15 minutes. Your smallest time frame that you should be trading should not be less than 15 minutes. Anybody that tells you you need to trade less than 15 minutes, all what I can say is he's not making a living trading. I'll tell you how come. If you take a trade on a 1 minute trade, on a 1 minute bar, what is your average winning pips? Is your average winning trade? How many pips do you take? 10 pips? Okay. And what is your stop? So if you are going to make a trade, it's simple math, guys. I'm sure some of you are very brilliant and you're making 20. Okay, then you're better than me. No, then you're better than me. You're good. Absolutely. So if you're able to take on a 1 minute chart and you're able to take 30 pips a trade and you are doing it 90% of the time, I am happy to give you a job here. If you are taking a trade and your average stop is 10 to 15 or 20 pips, and your profit target is 20 pips, you're very welcome to come. I swear to God, get me your track records, and you're doing that, I'll give you a chance. And I'll fund you and I'll back you. And again, you're able to do it. Listen, I'm not saying you can't do it. There are some people that are brilliant people that have the ability to do that. All what I'm telling you is, that's what I'm able to do, and that's what I'm trying to teach you. There are other people that have a different style of trading, and there are other people that do different things, and there is no one way to skin the cat. So if somebody's doing it, then all the power to you. What I'm doing this, I'm showing this way of trading. This is for the average people like most of us and myself. I'm not going to sit every day, sitting with my fingers, risking 20 pips to make 20 pips. By having a win-loss ratio and having a risk-reward equal to each other, you're risking £1 and you're losing £1. At the end of the day, mathematically, you will go broke. I hope in the very far future, but mathematically, this is simple math. 1 + 1 = 2. If you're losing $1 and you're making $1, eventually you're going to hit a series of times that it will be going against you. And in this business, if you're playing with the odds, your risk is 1 and your loss is 1, then the odds are that somebody with a bigger bankroll is going to be able to withstand the market, and eventually, which I do not wish on anybody. So for most of us, we need to be, when you're trading, you need to be looking primarily not of how fast and what is it. You want to make sure that the trade that you see has what we call a high probability trade in its effectiveness, and that it allows you a big or a large risk-reward ratio. So when I want to take a trade, I want to take a trade that gives me 5 to 1, 6 to 1, sometimes it gives me 10 to 1. And this, for example, is a classic trend change. You see this? Let me teach you something. This is interesting, guys. You see this trend from here? And somebody was saying a few minutes ago, how can I know that the trend is changing? Can you see this? So right here, once this happened, I am looking to be a buyer over here. Right? Now, I am buying it. I haven't bought it yet because I want to buy it when it begins to resume to there. So I'm buying it around 158.75. That will be my buying point. Okay? This is the highest point, so I have to wait until it gets above. I'm trying to teach you something. I know you've noticed. So if it gets above this, then I'm going to be buying. You see what? So somebody was talking about the 50% retracement. So what I'm trying to tell you is any retracement, by definition, if you listen to the term retracement means something pulling back and then it's going to resume in the same direction. So any retracement is considered a buying opportunity until you get a trend change. Okay? So if you look at, let's try this chart. You see this chart? The one here on the left? You don't know what's going to happen here. So if you look at this, what is the direction of the momentum here, guys? Up or down? What's the direction of the momentum here, guys? Up or down? Okay. Do you see that the move going up is an explosive move? Is it an impulse move to the upside? If it's an impulse move and it is moving up, we agreed that the impulse move is part of what? Is the part of a trend. And what confirms the trend is the impulse. The impulse moves is what confirms the trend. The impulse move is what gives you the direction. You will only get impulse moves in the direction of a trend. So in this case, if that's the beginning of a trend, and that's the impulse move, now what's the definition of a trend? The definition of a trend is a series of higher highs and higher lows. So right here, what do you want to do? To be a buyer or a seller? Let's say to buy around 158.15. Who wants to buy around 158.15? Who wants to buy at 58.15 when I have to do at the right hand side of the chart? That's what traders do. I'm not going to say here I'm going to predict it is going to go to 158. I'm trying to make a decision right here. What should I do? And I'm using these rules that I have in the chart. Oh, you begin with the first move. That is your first move. Then yourself, what will be the confirmation, Marco, that you're on the right move? If it takes out 158.23, then the trend is going up. So you're buying above the 158.23. That is your retracement. Now it got above the 158.23. And now your trend is up and it's continuing up. And now this is the new momentum high. If it gets above the 158, you wait until it takes the momentum high and you buy it. And the next time you buy it, and the next time, and we will keep on doing. That's the definition of a trend. And just by knowing this, you have maybe 4 winning trades and 1 losing trade. And we took the side of the momentum, so every time it broke above the momentum high, we made a lot of money, and the time we lost a small amount of money. That's all. That's what trading is all about. You don't need what is the moving average and what is the trend line and what is all that stuff is delays your decision making process. Okay, Coco, does it come that it is come to the point where some of them become irrelevant as more momentum highs and lows are created? Because I'm wondering if the charts do not become overcrowded with lines everywhere. Okay, that's a good point. The structure points, Coco, has to be, they come few and far between. Not every point is a structure point. There is a definition to what we call a structure point, and there is a definition to what we name as a significant point. A structure point is part of the building block of the chart. It's a part of the building block of the chart. It's what carries the chart. The significant points is something like this, something like this. A structure point is something like this. So you will be drawing your lines only when you see something of significance, then you put the line. You're not supposed to put lines at every line. Otherwise, of course, you're overright. But if it happens, I mean, that would be a seriously volatile market that you're trading, that you have so many structure points overlapping each other. And if you have so many structure points overlapping each other, Coco, then by definition, you're picking something which is not a structure point. Okay? But you wait for the confirmation, right, not to buy on the pullback. I don't understand what you're saying about that, Carlos. No, there is no confirmation. I mean, the idea of a confirmation, again, if it breaks above, let's say here, it goes above the 159.80 or the 157.80, I will be looking at the intraday chart and trying to jump in and buy. I am not going to say that is not true, Mike. That is not particularly true, because once the market comes in and it moves, the later you wait on getting into your entry, of course you would wait for a pullback, yes, but not always, because you have to make that judgment call based upon your experience and based upon the momentum in the market. Because sometimes if you are waiting for that pullback may not come at all, and suddenly this thing has gone perpendicular, and by the time you're waiting for a pullback, you lost. The stop is going to be too big, and you won't be able to enter into the trade. So there is a little bit of a judgment call, but in essence, in principle, I would rather get into the trade, and maybe the stop would be big, and rather than missing the opportunity to make money. Okay? Exactly, it's going to happen without that. So it's, again, there isn't one cookie cutter, there isn't one particular way, but again, here where experience comes into play, and you have to make a judgment call about how that high was taken out. If the high was taken out with momentum, I'd rather jump in. If the high was taken out, gingerly trying like this, going and then coming back and failing and going back, then I wait for a confirmation. Look here, did that, it failed. Here, can you see what I'm showing you guys? Here, in this area here, it went slowly. I had no momentum. It gingered, and then it rolled over. But here, because it took it with momentum, you see this, it went above it and it didn't look back. Let me space it a little bit. Look here. They are both the 158, 52, just gingerly didn't move back. But right here, look at this day. The day before it, look how big this one is. Look here. It is now going towards it was coming down, now it turned and it's going towards the structure point, but it went with momentum. That here, I will get it as soon as it gets above the 159, because they are chasing towards it. They are pulling it towards the structure, and right above it, I take. Then you got 3 winning days, and you made your money get up. Here, it was selling off, it came back. This entry here is much more stronger, and with this entry, I would rather jump in rather than wait. Okay? No, the one that has the one that has a lot of noise is the time chart. And if you know how to, the tick chart is basically 200 trades. Each tick is a trade. So we take 200 trades and we put them in one chart, and we use it to have the general value. So if one trade takes, one candlestick takes the high of the previous candlestick, so now I have 400 trades that have been winning and it's going up. That would be an indication of a directional trend. Maybe in size could be. Carlos, there is the idea of imbalances. I know, Carlos. The idea of imbalance and supply and demand, this is something you have to be. There is no way that you would say, okay, now I am in an area of an imbalance. Let me show you something. Take a look at this. No, I'm showing you. Okay, take a look at this chart, guys. What do you think this is? If I want you to describe this for me, Carlos, what do you think this is? Give me a description. Is it balanced supply and demand? Is it an equilibrium area? Right? So if now I'm going to come and buy it here like what you have been told, that now we can buy here aggressively. No, this is not the range. You're talking about this. Then I can buy it aggressively. This is what happened. This was yesterday. Now it is coming. Look at this. It was a massacre yesterday. Look at this now. No, there is no. You see, Jonty, my friend, there is no argument in trading. Trading, you don't be right. You want to be rich. Somebody can make a foolish trade and end up making money, and somebody can come up with the best analysis in the world and loses money. In this business, we're trading to make money. We're not trading to be right or wrong. I can sit with you at night and have a glass of wine and sit and discuss the macroeconomics and what's happening in the euro and what's happening with this, and we can discuss that. But we're not doing this for any other reason but make money. That's all. There's no right or wrong. Now, if you look at this here, right there, what do you want to do, guys? Is this now we can say, yeah, that's, I mean, this is what I tell my traders. I don't care to be right or wrong. I want to be rich. That's all. So right there, you want to be up. That's it. You have to make the decision using the price action because you don't know what is influencing the market, and that's it. But my friend, if the trend is down, right there, you're going to take it again, down, 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 and which is imbalanced, and you can keep on going all the way down, and this thing is just going to be a massacre all day yesterday. Look at it. Look at it. So you have to get the direction. You have to see which way the direction of the momentum. This is the momentum. Look at this. This is the momentum. It's short. So you have to go short, short, short. You don't buy. I don't think so. I'm sure you can do it with a high degree of accuracy. Okay, and I'm sure with more practice you can actually be very good at it. And trading is practice. Trading is practice. It's like the more you practice doing the same thing over and over again. You see, when you trade with an indicator, you cannot practice because you can really not gauge what a moving average is doing or what an MACD is doing, and they put the MACD on the RSI, on the stochastic and the stochastic. I mean, there is nothing left on your screen to trade with. But if this is what they do. So now you're not trading the prices, you're trading but the danger is that these squiggles that you see on the moving averages and the RSIs, you cannot hold them to be consistent. They don't have the repetitive factor that you have but they don't give you this repetitive pattern. Anyway, we have 1 minute. We'll do this next week. We will do this next month with the again. Let's write these questions down, and if you want, you can send them to me. I'll be happy to answer your questions. Okay.